Hi, this is Jason Poyner from the Phoenix Property Group. Well, if you've been watching our series of videos so far, you're starting to get a concept of what a short sale is. And basically what's the difference between a short sale and a foreclosure. And as we've gone over other videos, the biggest difference is a short sale can ding your credit for a year or two, and it can be some negative things, where a foreclosure completely devastates your credit. So from a credit perspective, you want to have a short sale 1,000 times over a foreclosure. But the biggest, and really the question that we're here to answer today is, what's the tax benefits? Because there have been a lot of misnomers and so forth in the media that are saying, hey, it's better from a tax perspective to foreclose than short sale. And then you hear short sale and foreclose, and it's just not a whole lot of clarification. So I'm here today with Tory Sawyer.
Hi.
My CPA. And we've owned up to 30 homes and multiple investments, and Tory's an expert in the field of real estate taxes. She's here today to we're going to do a little question and answer about what the differences are from a primary residence or an owner-occupied residence and then an investment. So, Tory, I bet this is a question you're getting often.
It is, on a regular basis, particularly from you.
And is there a lot of confusion in the media and so forth?
I think there was some confusion when the laws initially changed and they gave some relief for cancellation of debt to taxpayers, and now it's starting to level off, and they've got some new publications out that are really helping clarify things.
Okay, so I'm a regular homeowner, primary resident, and my house is worth $200,000 or $400,000, and now it's worth half. I want to short sell my house. I have a hardship. I'm ready to move forward, but what's better from a tax perspective? In other words, what's my tax liability going to be different from a short sale or a foreclosure?
Well, every tax situation is different, which I have to say automatically, but foreclosures and short sales essentially are being treated exactly the same. From the IRS's perspective, basically it's what type of debt is getting canceled, what the debt is secured by, is more important than how that debt goes away, whether it's foreclosure or short sale. So essentially, the IRS says that if you have debt canceled, it's income to you, but there are specific exclusions to keep you from having to pay tax on that income. Those include real estate owned for business purposes and primary residences are two examples.
Okay, so that really clears a lot up for primary residence. It's pretty much a no-brainer then to short sale, because short sale or foreclosure, your tax liability would be the same, which is none.
Right, and essentially, in most cases.
And that right now is only for a limited time. What time does that cover?
That covers through 2013 now.
From 2006?
From 2006 to 2013, sales that occur in that time frame.
Okay, good. Now, for a lot of my clients were investors. A lot of people were buying 1 or 2 or 3 or 4 or 5, possibly rentals in that course of time, and maybe they're foreclosing or they want to short sale a couple of their properties to get out from under them. How much difference is that? Is there a big difference from foreclosure to short sale?
No, it should be treated again the same. The exclusion in the IRS publications says qualified real estate property held for business. So the key there is whether those properties have been treated as business investments and properly recorded with tax returns in the past. Oh,
okay. So basically, initially there was some confusion, but now they have it straightened out to where any loss, basically, unless it's millions and millions, right. Over $2 million, you said? Mm-hmm. And obviously, everyone should consult a tax person. But most of the people we're running into are very simple cases. They're 1 or 2 homes, and investments are short or primaries. So the short sale really, when you take the credit and the tax in perspective, is really your best option right now.
Right, absolutely. The timing and the credit advantages to a short sale make it absolutely the better choice.
And you're going to pay the same amount of taxes, which really right now is none for the loss.
On the actual cancellation of debt, correct.
Oh, awesome. Well, thank you so much, Tory. I really appreciate your time. I had to drag her kicking and streaming, because it's hard to get a tax person to actually give you a straight answer. I don't know if you guys have ever experienced that. But Tory's going to leave her name and number with you. If you want to call her and you're a client of the Phoenix Property Group, you can have a couple of questions free of consultation, and then she'll just bother me about that, right?
That's right.
And if you're not a client of the PPG and you just want to know, there is a fee obviously to get some of the advice. But Tori, why don't you give me your information or the best way to contact you via email or phone?
Right. The absolute best way to contact me is going to be email, which is Tory, Torin, like Nicole Sawyer, Sawyer @cox.net, or you can text or call me at 602-989-3492.
Well, again, Tori, thanks so much for agreeing to my crazy ideas, and I just figured it's a good way to do this video so we can just email it out and get the correct information out there. And what's the name of that tax law, and when did it go into effect?
Sure. The tax law is the actually, let me read it correctly: Economic Stabilization Act of '08, and your best reference is the IRS website at www.irs.gov, and you're going to look for Forms and Publications, Publication 4681.
4681. Pretty clear.
Yeah.
Thanks a lot.
Thank you.
And hope to hear from you guys real soon. Any other questions regarding short sales? My number is 623-451-4209. Thanks a lot, and hope to be hearing from you guys real soon.